Hello and welcome to this week's market update. Last week was a good one. Let's see if the good vibes can continue. The markets have been really nice actually. Very difficult to make too many mistakes when we have some strong trends. So that's what we're going to address in this week's market update. Before we start though, so always I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. I will provide a live market commentary, but this is made with an educational purpose. It's not intended to be viewed as investment advice. So last week we had a bit of data out, but I think the most important one is the second one here. So US inflation came in at 2.6%, as predicted, but higher than the 2.4 prior. Also, core inflation remained at 3.3% annually. So you have high core inflation plus headline inflation is going in the wrong direction. So this is obviously not great. In addition, jobless claims came in at 217K, which was lower than the 224K anticipated and lower than the 221K seen in the prior week. So labor market is doing good because these numbers are not necessarily as low as we saw in the beginning of the year, but they're roughly at the same levels. So you have a labor market is doing all right, and you have inflation going up. So that's obviously not great. It's great for the US dollars, which Euro USD declined to a fresh 2024 low, but it's obviously not great for gold, and stock indices by the end of the week didn't like this data too much either, especially as US retail sales came in reasonably good. So overall, US economy is doing better than expected, inflation is stronger than expected, and this is causing people to project that maybe there is a lower chance of a 25 basis point rate cut by the Federal Reserve in December. So what can we look forward to this week? Unfortunately, there's not too much to focus on. We have Canadian inflation figures on Tuesday, so CAD yen, CAD USD, like all these currency pairs can move a bit, maybe 30, 40 pip based on this. If you want to, you can create strategies around that. If you're trading stocks, then we have Walmart and we have Nvidia coming out. Nvidia, as you know, has a huge impact on indices. So if the numbers are better than expected, Nasdaq 100 can have a bullish push, and if it's worse off, you can see the Nasdaq 100 coming down quite hard. So that's what's going to matter on Wednesday. As well, we have UK data, which is always good and interesting to trade. So for example, GBP USD and GBP yen on the basis of UK inflation data. Inflation, as you can see here, was 1.7% annually last time. So we're talking about quite low levels. And then we had core inflation was a bit too high at 3.2%. But that's going to be interesting to watch. Thursday as well offers jobless claims, and Friday offers an indication of how the Euro area, UK, and US economies are doing, as we'll have the latest PMIs. The PMIs are just indices where they ask different companies, are you hiring more or less? Are you producing more or less goods? How does your inventory look like? Is it more lean or fatter? They ask all these different questions to get an indication how the economy is doing. And what's quite interesting is that it's anticipated that we might see these numbers artificially pushed to the upside. What could that be? Well, you guess. But I can tell you that with tariffs probably kicking in quite soon, it's quite likely that both US and UK and European and Chinese companies will all try to maybe pre-purchase and buy things they need for 2025 before President Trump takes the helm of the US government to avoid any tariffs. So we might actually get artificially high figures in the next couple of months, which then would be matched by depressing figures as the buying potentially tapers off. So that is something to focus on. And again, it all lowers the probability of getting more rate cuts from the US. And in general, as we talked about many times here before, with Trump's proposed policies, inflation might pick up in the U.S. The dollar will probably gain as well, and stock market is pushing to the upside. So, from a technical perspective, what's going on here? Well, last week we said, as long as we're below 108.30, we can go to the downside. So we're trading roughly here. We did indeed go lower from around 107. We hit as low as 105, a bit lower even. We hit a fresh 2024 low and are actually just a couple of pips away from reaching a fresh, trading below the 2023 low. Now, if we break below the 2023 low, we can go much lower. We also have that not long-term target, but we have a target of 103, which we said was going to kick in on a break of 108-ish. So when we breach this level here, I said we can go down to 103. That also remains in play. Now, if you're looking at this today, like how can we manage this? So I would say the market is strongly bearish below 106.64. Until we break above that level, the market could head to the downside. One option is to sell around 106 with stop losses above 106.64. Alternatively, if this trades sideways for a few days, will break the lows, then that could also encourage people to short sell. As for the S&P 500, this is pushing to the downside. Last week was a bit boring, not much happened in the beginning, and then by the end of the week we started to push to the downside. But if you look at this, we're dealing with a nice uptrend. It's time to get ready for the Christmas rally. It's time to get ready for the Trump rally, I would call, because realistically, he's going to cut taxes, and both for everyone really and for companies. So there was going to be more money around, less regulation, and this is going to cause the probably the S&P 500 to push a bit higher. Now, the reason why it's not soaring like crazy is because the market was already up. It was up with like 24% before the election. And in most election years, you're not going to be higher than 30%. So there's limited upside. Now, fast forward, what can happen next year? That's interesting. When the when the Republicans control the president post, the U.S. the Senate and the House, then that tends to lead to a growth of about 13% on average for the S&P 500, which, if we're trading around 6,000 by the end of the year, means that we can maybe push to 6,700 or so. So definitely to the upside, I would argue, as long as tariffs are not introduced, from day one, pretty much, or mass deportations. How about gold? Well, gold was trading sideways between 2,708 and this level here. We were bearish overall, and we pushed to the downside. So here, selling close to the highs would have been good, and then probably book profits around here. Looking at this today, we are dealing with an uptrend, but a few things have changed since we were trading this uptrend, which we actually traded very, very well on the upside. So what has actually changed? What has changed is the fact that now the dollar is anticipated to gain massively over the next over the next 12 months. Moreover, there is talks of potentially Russia and Ukraine war ending early. Now, just Sunday, there was talks at allowing Ukraine to use long-distance missiles to hit targets inside of Russia, and that could escalate things, of course. But for now, the way things are looking, the support for Ukraine from the U.S. is going to diminish, and that can push people to the table and negotiate a peace deal or a truce, I would say, and that is something that is influencing gold in a negative way. So all in all, looking at this and also looking at the charts, as long as you trade below 2,626, then there's absolutely no reason to assume that we're going to bottom out. We might go up to 2,600, but I think people are going to look to sell. And then if we're indeed going up, I think we might spend a couple of days here, or a week or two, before going up. But I don't think so right now. For now, below 2,626, the trend is bearish. Now, this is crude oil prices. So in crude oil prices, last week we're trading around here, and I said as long as we're below $76 a barrel, we can go down. We sure did. Looking at this today, you got 1, 2, 3 double bottoms, and then you have resistance here. Also, if you wanted to, this is a head, left, and a right shoulder. So head and shoulders. So the 70.16 mark, which is the low here from October, it could potentially break here when you go down to 68, 66, and ultimately $64 a barrel. So that will be the easier part here of trading this. And I would definitely keep an eye on that. Until that happens, this can of course go up to 74, maybe 76, but I doubt that right now. Bitcoin. All right, so here's been very easy money. Here I think markets, we've been sharing with the election page, the weekly articles. We've been ultra bullish, gold and crypto all of the year, and it's been working out really well. And here I continue to be bullish, but what's just happening is that the market gained really strongly, and now the market shrinks sideways. So in a very strong uptrend, even a 5% dip is usually liked by people, and people are gonna go back and support it. A 10% slide, even more. So a 10% slide would be 54K, and then a 15 or 16% slide would take it down to 78K. Now we'll be very surprised if we go down to 16K, but it could happen. So what's the game plan here? There's three ways of dealing with this. One is either buying really close to 84K with stops below. Alternatively, look to buy close to 81K with stops below 78K. The third one, and probably even more likely, is that this turns into some sort of a triangle, and then we have a breach to the upside and pushes to the up higher. Now remember, guys and girls, what's happening here is that we're gonna have the Santa Claus rally soon, and also just risk on. The best months of trading is November, December, January, February, March, and then afterwards it turns a bit boring. So you tend to have all these bullish price action tends to be now. If you have traded crypto like I have done before, like even when everybody's sort of relaxing with the family, so on 24th of December and 25th of December, you tend to get some crazy moves in crypto. And now with things shaping up as they are in the US, it can get even more bullish. So we definitely want to keep an eye on this. Want to keep an eye on indices, want to keep an eye on gold, because I traded during Trump's last time he was president, and I don't think it's going to be simple. If touch wood, it's going to be simple, but you will see he will look to intervene. He's implementing strategies that should push the dollar up, but I can bet you he's going to be on Truth Social or Twitter saying, why is the dollar so strong? The Fed should cut rates, and then you'll see your Euro USD trade being stopped out. In the terms of oil, if oil prices are too high, he's going to be, oil prices are too high, why are they going up? And you'll be stopped out of oil in case you're long. So it's going to be quite a messy situation. So if one wanted to trade, it will not become easier than it has been in recent weeks. It's going to become more difficult, because right now we sort of know what he might do, and that's why people are buying cryptocurrencies. That's why we're buying stock indices. But then at one point it's going to be, okay, so what are you actually going to do about it? And we're going to get proposals from his government, and if the proposals don't live up to what people think, or things are being delayed, then it's going to be profit taking and maybe even some short selling. So things will change on January 6th, and now is the time to take action. With that in mind, if you have any questions, it's the time to put them in the chat right now. We usually host this market update on Facebook and on YouTube, same time every Monday. So if you have any questions, put them in the chat. I'm going to see if you have any questions here. Okay, so we have nothing on YouTube, and I'm guessing it will be the same on Facebook. You guys are very shy, which is all right. But if you like it, it's very important that you drop a comment, just a simple hello, because that helps us see if you like it. If nobody likes the content, then obviously we will not do it. Simple as that. Okay, good. So it looks like we don't have any questions, which is all fine. I want to thank you so much for watching. If you do have questions for us, just drop them in the chat and we'll circle back to you. Thank you very much, and we'll see you next week.